welcome back. You're watching The Money Show on ET now. It's time for our Spend with TMS segment. And considering the fact that we were talking about the announcements, the discussions, the speeches by the chiefs of central banks around the world and the impact it has on the various asset classes we own, we'll take forward that conversation. Well, if you thought that the announcements and speeches by central bank chiefs has an impact only on equities and moreover yields and thus debt funds, think again, because even gold prices do tend to have quite an impact. It's a regular household item that's, well, there in almost every Indian home, but gold prices also have seen quite a bit of movement recently. In the United States, gold has gone beyond $1,800 per ounce. A nice uptick is what we have seen. Back home as well, recently they had hit 46,000, but now slowly we are seeing prices go a little higher to 47, 48,000. So how should you make sense? And of course, this is to looking at gold from an investment perspective. How should you make sense of all the news flow vis-a-vis its impact on gold prices? To take forward this conversation, I have with me Roongta. Mr. Roongta, thank you so much for taking out time and joining us today. So, I want this session to be a bit more educational as well. Macroeconomics can be a little dreary, a little bit jargony for our retail investors and viewers to understand. So if you could simplify it, how do gold prices get impacted by announcements and, debates by global central banks, particularly the United States, which is, usually the price maker for gold?
Well, I think two things. We'll come to the central bank announcement in a bit, but I think a larger question should be that should you decide your overall asset allocation based on momentary prices? Because, an asset allocation is a long-term process. You don't change it based on what's happening month to month or day to day. So having said that, let's look at what impact does central bank announcements have on gold prices. I think the biggest could be, and not in that order, obviously, one, because I think the monetary policy, all the various things that the central banks do, whether it is interest rate signals, whether it is anchoring or, sort of dampening the inflationary expectations, all that has a very, very important impact on gold. If inflation is expected to be high, and the general household expectations is that inflation will be high, and the central bank is okay with it. And I think during times when inflationary expectations are high, the gold prices tend to go up. Something similar with interest rates, if whatever, because of the monetary policy, because of the rate announcements, the policy rates that the various central banks have, if because of that, the interest rate outlook is going higher, typically, therefore, money becomes, dearer. Then a lot of gold lying in, private hands will come to the market because, it can get converted into money. And that again tends to push up prices. Third is plain and simple. If the central banks are going to buy gold, almost all central banks, including our own RBI, has gold reserves. And if they are going to increase those gold reserves, then obviously they're taking supply out of the market and prices will rise. On the other hand, if they are going to decrease those reserves, then the prices would fall. But that's where the central bank is acting like any other buyer, except that central banks tend to be very, very long-term in their outlook, and they won't really buy, sell or churn their gold reserves that quickly. So therefore, what they do with the reserves would have an impact on the gold prices. So all in all, I think obviously, but these are not the only things that have an impact on gold prices. In India, for example, the customs duty announcement. I mean, if the customs duty goes down, the gold prices would go down. This is typically Indian reason for gold prices. So my point is there are a lot of things that impact gold prices. Central bank announcements are a very important, but only one part of how the gold prices will be affected, and thus should be taken like that.
Okay. From a retail investor point of view, Mr. Roongta, then, how much do levels of gold really matter? We are so used to looking at asset classes from the point of view of, okay, is this a good price to enter or is this a good price to exit? So, do gold price levels matter? For example, if someone wants to enter right now, they'll say that, oh, okay, just 2 weeks ago it was at 46,000, so maybe I should wait for it to cool. Do such things matter then for gold when retail investors looking to include it in their portfolio?
So like any other thing, like any other asset class which is volatile, where the prices go up and down, right? Whether it is equity, whether it is gold. I mean, gold prices we have seen are quite volatile. So I don't think price levels should be determinant on your entry or exit. Any allocation should be pre-decided. So whatever you have decided, 5%, 10%, build it systematically. Therefore, you are insulated from price drops or price increases. At the most, if you do want to time, then you may accelerate your buying. If you are in the middle of a buying cycle, you may accelerate your buying when prices fall. But other than that, I don't think you should do any timing. I think you should stick to buying systematically, just like you would buy equity.
Okay, well, I think we've got that comprehensive coverage that we wanted, on this topic. When you read the papers, when you see social media, you read the news channels, you see it's a buzz with what the Fed has announced, etc. But, how to make sense of all of it from your money perspective is as well equally important. So, Mr. Roongta, thank you so much for being a part of this show.
Thank you, Movina.
And I think with that, we're completely out of time on this episode of The Money Show. Thank you for watching. Stay tuned to ET Now.